Call option is at 18,000. Lot size is 50. What is the maximum loss you can incur in this trade and what is the maximum profit you can make in this trade? Can you quickly tell me?
What 18,000 call option at 50 rupees?
You bought it at 50 rupees. Okay,
Okay.
leave how the market reacts, leave all those things. What is the
Uh,
maximum profit you can make with this? Huh? Common
if
sense.
it, you bought at 50 rupees, 18,000 call.
Huh.
Lot size is 50.
Hmm. Okay, at least
Yes.
tell me what is the maximum loss you will make in this? Pawan, if you
Depends
don't, huh?
depends on the market now.
Hey, what is the maximum loss you can incur if you hold this? What is the worst case scenario? Guys, worst case scenario is this option price will become zero.
Zero.
What is the maximum loss you can incur?
Zero.
Zero is the maximum loss.
No, you won't make any over it.
So how much have you put in to bought this option?
2.5.
What is your maximum loss?
2.5.
That's all.
Uh,
Ashte, that's all I'm asking.
ಅಪ್ಪ ನೀನ್ ಲಾಜಿಕಲ್ ಎಲ್ಲ ಕ್ವಶನ್ ಕೇಳಿದ್ರೆ ನಾವು ಯೋಚನೆ ಮಾಡಕ್ಕೆ
ನೀನು
ಆಗಲ್ಲ.
ಲಾಜಿಕ್ ಹಾಕಿ
ಮಾಡ್ಬೇಕಪ್ಪ ಯೋಚನೆ.
questions
These are
ಕೇಳಿ
all
ಕೇಳಿ ಈ ತರ
mathematic.
ಕ್ವಶನ್ಸ್ ಕೇಳಿದಾಗ
Very simple mathematical questions these are. Okay, fine, leave. What is the
ಬಿಡು.
maximum profit you can make? Manshu, you've been silent from that time. What is the maximum profit you can make if you buy this option? Till what extent can it go? No takes? Don't you think maximum profit
10,000
ಎಷ್ಟಪ್ಪ ಎಷ್ಟು ಹೇಳ ಅಜಯ್ ಮ್ಯಾಕ್ಸಿಮಮ್ ಪ್ರಾಫಿಟ್ ಎಷ್ಟು ಮಾಡ್ಬೋದು ಇದರಲ್ಲಿ ಬೈ ಕಾಲಲ್ಲಿ
10,000
ಹೌ
10
10,000
ಮ್ಯಾಕ್ಸಿಮಮ್ ಎಷ್ಟು ಬೇಕಾದ್ರೂ ಆಗ್ಬೋದಲ್ವಾ? ಡಿಪೆಂಡ್ಸ್ ಅಪಾನ್
Abba, everybody please clap for Ajay. This was actually a good, this was the answer I was expecting. Please clap for Ajay, please.
ಕ್ಲಾಪ್ಸ್. ಥ್ಯಾಂಕ್ ಯು
Ashte
ಥ್ಯಾಂಕ್
Guru
ಯು.
Ajay, see, that is what I'm saying. Logical thinking means not sticking to what I thought you, it's a little logic you need to have. Correct, you're absolutely right. See, guys, that call option can go wherever it can. So the maximum profit you can make is unlimited. So Nifty can go to 19,000, 20,000, 30,000, 40,000, 1 lakh, 10 lakh, 1 crore also it can go, no? You never know how much it can go. But what is the maximum loss you can make? The maximum loss is only to the extent of the option you hold. Correct? What is the worst case scenario? Your worst case scenario is that option price will become zero. Whatever you bought have become zero. So my question is, can you go manually, hold this calculator, you be like, ayo, okay, option price is 50 rupees, 50, into 50 size, okay, now Nifty is at 18,000, okay, now I'll calculate, do plus. Will you do that? Sit and do. By the time that option would have gone up only. So that's why there are option calculators. And options are contracts that are derived mathematically, because I literally showed you how an option is priced. How is an option priced? It is the call option intrinsic value plus the time value of money. Correct? So whatever is the intrinsic value, even if the intrinsic value is minus, then we consider it as zero. Whatever is the extra figure that you have, that is considered as time value of money. So in that, we can understand what is the maximum profit we can make, what is the maximum loss we can incur. So all these days we spoke only about buying a call, buying a put, buying a call, buying a put. But today we learn a very important concept of what will happen to the other side, that is the seller. So you all understood that story, right? That Ajay and Gautam will come with a contract. Even if Gautam does not have any shares, Ajay will still buy it from him, correct? So Gautam will become what? Gautam will become a seller. So please keep this in mind, or make a note of this. An option seller always has an advantage over an option buyer, and I will show you how. So to see how exactly an option works, right? to see how exactly an option works, we need to look at something called a payoff chart. So a payoff chart is a chart that represents an option contract. It literally shows us how much profit you can make, what is the maximum profit you can make, what is the maximum loss you can incur from buying a particular option contract or selling a particular option contract. So let me just show you the payoff chart, then I'll explain what exactly selling means. Cool. So you can go to a new tab on Chrome. Okay, you can go to a new tab on Chrome. This is the free version. There is something called Sensible in Upstocks itself. So you can use that. So you can type something called Opstra, and you can go to this and you can log in or sign up. So let me just send you the link so that you can also do it side by side. Opstra. So just open that and register yourself as soon as possible. So I'll just log in with my Google, and you're here. Okay. So now we can go to something called as a builder. Can you see there's something called as a builder? So let us take Nifty. This is a calculator, guys. This is a calculator which is going to help us with analyzing how exactly an option is going to react if we buy or sell it. So now Nifty spot price is at 19,424 rupees. What? Nifty spot price, you can see right here. You can see here Nifty spot price. So Nifty spot price is at 19,424 rupees. So now Ajay will assume Nifty will go to 19,600. So Nifty will go to 19,600. So which call option will you buy, Ajay? Tell me a random call option. Anything works.
19,600.
Perfect. So Ajay said 19,600. So what you do? Nifty, change futures to options. Oh, you know what? I'll show you futures payoff chart also. So in case, okay, instead of options, let's say that Ajay has good money and Ajay is predicting that Nifty is going to go up in the next 10 to 15 minutes. So what Ajay does, instead of buying an option contract, he just enters into a futures contract. So he just goes and buys Nifty futures. So he'll click on buy. So and you add position here. One lot. Quantity is one lot. And you just add position. So once you scroll down, can you see? You see something called as a payoff chart. Okay, you see something called as a payoff chart. So here if you can observe, the first thing that you can see is the probability of profit. It's around 42.93%. So that means the probability of Ajay winning this trade, that means the probability of Ajay being profitable in this trade is only 42.9%. Because it's almost 50%, right? So either if it goes up, he'll get a profit. If it goes down, he gets a loss. So it's a 50-50 chance. So either it goes up, either it comes down. So there are only two possibilities that can happen. So that's why it's at 43.9%. But why is it at only 43 and not 50? Right? So that question comes to your head and I will show you how. So why is it only 42.93%? And why will Ajay get a profit? See, so when you hover over here, this is the price of the Nifty and this is the profit or loss he will make. So the green line you can see here is if Nifty goes up. See, if Nifty stays here at 19,431, Ajay will make a loss of 3,600 rupees. Even if Nifty stays at the same point that Ajay has bought it at, he will not make a profit or loss of zero, but he will in fact lose 3,600. Why? Because Nifty future, can you see? Nifty future and Nifty spot has a significant amount of difference. So can you all quickly calculate what is that premium it is trading with? So right now future price is at 19,503. The spot price is at 19,424 rupees. So what is that extra amount? Can you please calculate? So future price minus spot price you do. Guys, quickly.
Bro, 79.
How much? 79 alva.
Uh,
So now Ajay, you have bought one lot. Alva, you have bought one
hmm.
lot. One lot is 50 quantity maga. See here, lot size is 50.
Hmm.
So now what is the extra amount you told? Here, 19,503 minus 19,424. What is that extra amount?
79.
79. 79 is what? It is nothing but time value of money.
Time value of money.
Correct. So what happens is when as and when if the spot price, okay, as and when the spot price goes above this price, that is when you start making money. But if the spot price remains here only, what will happen, Ajay? This futures price will come to this price, alwa, because the
Hmm.
time is decreasing, so the price of the futures also keeps decreasing. So that is why when you buy this option, can you see? When you buy this option, there is a difference. There is a future premium that is there. So that is why the probability is less. So instead of buying, let's say Ajay, okay, let's say Ajay will become the seller. So what he does is he goes to the futures market and Ajay will think, no, Nifty is not going to move anywhere. It is just going to stay here only. But the futures price has 79 rupees extra. So why don't I just sell this and I will sit until the price corrects to this point. So what will Ajay do? He'll go to futures and he will sell one contract and he'll add the position. Can you see here? The probability of him making profit is 57%. And even if Nifty stays here, see, even if Nifty stays at the same point, his total profit and loss. Can you see P and L? Can you see P and L here? P and L here. Can you see P and L 4050 change from spot? So even if Nifty doesn't move, Ajay will still make a profit of 4500 rupees. So that is why, guys, you all have to understand the concept that when a contract is drafted, it is not only the buyer, even the seller also comes into existence. Correct? So what happens here? So let's say it's Ajay and Manshu. Ajay is the buyer, Manshu is the seller. So Ajay drafts up a contract saying, Manshu, I will buy Nifty from you. Does Manshu have Nifty? No, he does not. It is literally coming out of thin air for him. So he says, okay, bro, you do one thing. You buy from me and you pay me the value of Nifty. So Ajay is going to pay Manshu some amount. How much is Ajay going to pay? Ajay is going to pay Manshu around 19,503 rupees. Only if this price goes above 19,503, Ajay will start making profit. How will Ajay start making profit? Because his value of the contract is increasing. His value of the contract is increasing, and Manshu has to give back the amount to Ajay, right? So Manshu is losing money from his pocket. But in fact, here, what if Nifty doesn't go anywhere and it stays here? So the contract becomes cheaper. So Manshu, instead of paying Ajay 19,500 rupees, he's going to pay him 19,000. How much? He's going to pay him 19,424 rupees. And he's keeping that 79 rupees back in his pocket. So that is why, guys, we have to always understand that selling is a better option than buying. But selling means unlimited loss. The same way a buyer has unlimited profit, sellers have unlimited loss. That means you do not know how down it can go. Correct? So in let's say for example, Manshu has sold the contract, correct? And suddenly Nifty kept going up and up and up and up and up and up and up. Here Manshu lost almost 20,000 rupees. So Manshu has to keep giving him back from his pocket. But Ajay, how much will he lose? He'll lose only 19,500 rupees. He's not going to lose more than that. But a seller will lose more than what he has. Because as and when Nifty keeps going up, because it's unlimited. Nifty can go up till 1 crore rupees also. So Manchu has to keep giving Ajay. The contract becomes more expensive and more expensive. But in the real life, guys, can Nifty shoot up to 20,000, 25,000 rupees? Suddenly? No, right? So always the consolidation happens and time keeps decaying consistently and continuously. And as and when time keeps decaying, a seller keeps making money. So you need to understand who a buyer is and who a seller is properly. So here, let us take an example of a buyer. So let us
Which is
say,
more riskier than buying or selling?
uh, see, technically speaking, selling is much more riskier, but the winning rate is higher at selling. And logically speaking, if you know these strategies, you can use sell and buy in a combination and reduce your risk. And I will show you how to do that. Okay. So now let us say Ajay is a buyer and he says he wants to buy an option. Let's talk about an option. So Ajay, right now the spot price is at 19,424, and I said that that Nifty will go up to 19,600. So what did you tell? You said you want to buy a 19,600 call, correct? And you have selected the date of 31st August. That means the month end. So right now the price is at 118 rupees. Correct? The price is at 118 rupees. What is the actual price of this option? It is 0. Correct? It is 0 because the spot price is at, the future price is at 19,500, but the option price is at 19,600. So it's a negative. So obviously the option price is 0 and this is a completely pure time value of money contract. In case Nifty stays at the same level, this entire option contract will become 0. So Ajay's contract will expire at 0 because I said Nifty will touch 19,600 and he's gone and bought a 19,600 call. He could have told I want to buy a 19,400 call, right? No, he didn't tell. So anyway, let us take the same example and we will buy this. Okay, so we will buy this option. So just put add position. Okay. Oh Jesus, 1 second. There's some glitch with the page. So options. Let's take 17th August only. Let's take. That means there are still 6 more days for the expiry, and let's see how much is the options worth. 18,600 call. Hey, sorry, 19,600. I'm so sorry. 19,600 call. Ha. Right now it's at 36.8 rupees. So this 19,600 call does not have any intrinsic value. So it's a pure time value of money contract. So let's just buy this option, one lot, and we'll add the position and we'll see how the payoff chart looks like. Wow. Now can you see? Until until Nifty crosses 19,630 rupees, Ajay is not going to make a profit. So until then, his maximum loss, can you see here? His maximum loss is only 1,800. His maximum profit is unlimited. It cannot be defined. And he'll break even if Nifty comes over here. So that means Nifty should come to 19,603 rupees. That means how much? Almost 200 points up for him to even make money. If it comes by 200 points up, that means he will break even. That means his price will become 0. But what if Ajay decides to sell it tomorrow only? Can you see? If Ajay decides to sell it tomorrow only, as soon as Nifty goes up, he'll start making profit. So that is why, guys, the more time you take to hold this option, the option keeps decaying. So whenever you're a buyer, do not hold it for more than 1 day. Please understand that as a buyer, the option contract keeps decreasing in value. So do not keep an option contract for more than 1 day. So now let's look at a seller. Okay, so you can just swap the position here and we'll see what happens. Aha, can you see here? When you're a buyer, your probability of profit is just 19%. But if you're a seller, your probability of profit is how much? 80%. Look at that significant difference. It is 80% if you're a seller. Why? Because as and when Nifty is at the same spot, you will make 100% profit. And one thing you have to, there are two things you need to observe. As a seller, the maximum profit you can make is only 1800 rupees. Why? Because the premium you get is only the extent of how much money you can make, right? Because if the option value becomes zero, that is when you get the entire money into your pocket. You do not have to pay anything extra. So whenever you're an option seller, you have a predefined target. But when you look at the loss, the maximum loss is unlimited. That means if this contract Nifty has the potential to go how much ever high it can. So if it keeps going up and up and up, the seller has to give out more money. And the options that he holds, it becomes more expensive and he starts shelling out money from his own pocket. So that is why if you want to sell an option contract, you need to have at least 1 lakh rupees in your bank account to sell it. That means even if you sell it, the value of the contract is only 1800 into 50. But the loss is unlimited. That is why you need to have at least 1 lakh capital in your broker account to sell a contract. Okay? Why? Because as and when Nifty keeps going up and up, you need to give it from your pocket, correct? So to give it from your pocket, there should be some sort of a margin. That means if you sell it only at 1800 and it goes up, and if you have no money in your bank account, obviously it will go into negative, right? So to avoid that, SEBI or the Securities Exchange Board of India decides the margin or how much money you need to keep in order to sell even one lot of option which is worth only 1800 rupees. So even if you want to sell a contract that is worth only 1800 rupees, you need to have 1 lakh rupees in your bank account. So that is why they say option is a game of a rich man and a rich man always wins. Okay, so that is why if you have paisa in your pocket, your probability of winning is also more. So let's say you're like me, one cheap fellow, no money in the bank account, no money anywhere, no money in the pocket also. But I'm a smart man. I'm a very smart man. I use logic. So what I do, I'll be like, okay, let's do one thing. I sold this option to Manshu. I have some with me. Correct? So what I did, I have bought the option. I'm a cheap fellow, correct? I'm a cheap fellow. Let's assume that I'm a buyer. Buyers are always cheap. So I have bought the option from Manshu. Let's say I have bought an option worth 10 rupees from Manshu. Manshu becomes what? He becomes a seller. Let's leave him for some time aside. So I have 10 rupees with me. The probability of me winning is only 19%, let's assume. But I want to be someone where I want to increase my probability. So I have options with me. If I have that option with me, why don't I go and sell it to somebody? So I have bought an option at, let's assume, 9. Let's delete everything and let's start fresh. So let's say that I am a buyer. So I am a buyer. So I am assuming I don't have enough money in my wallet. I have only 2000 rupees in my wallet. I have only 20,000 rupees in my wallet and I want to sell. But I don't have that sort of margin to sell one lot. So what I will do is I will buy at 19,600 for 36 rupees. Okay, so I will buy. Observe very carefully. So I've added the buy call. So I have 1800 rupees worth of options with me. So what I'll do is I will go and sell it to somebody who is with a lower strike price because I know that Nifty is going to go down. So I will go and sell 19,400 call at 130 rupees. I'll go and sell. So what is the difference amount I need to pay? I need to pay the difference amount of only 94 rupees because I have 36 rupees with me, and I go and sell it to someone who is willing to buy it at 130 rupees. So the difference amount I need to pay is 94. So I will add the position here. Can you see here? My margin is the margin that I need to sell becomes only 30,000 rupees. And moreover, I have mitigated the risk and return I've mitigated, because the probability of me winning from 19% became 60%. And I have a defined profit and I have a defined loss. No matter how much the market goes up, my loss will not be more than 5,300 rupees. No matter how much the market falls and I win, my maximum profit will only be 4,600 rupees. And this, guys, is known as a bull put bear put spread. Sorry, bear spread. So that means I am betting that the market is going to go down, but I do not have much capital with me. So what I do, I buy an over the top or out of the money call option, then I sell at the money call option. Right? So let's assume that I sold only this much. So let us say that I know that the market is going to go down. So what I do is I go and sell options of 19,400 rupees. I sell it off, because as and when the market goes down, the option keeps decreasing, and how much ever it decreases, I get that much profit. But look at the margin that I need. I need around 1,15,000. I do not have so much money with me. So what I do is I buy an OTM call option of 19,600. I go and buy from 1,15,000. See how much it reduces to. It reduces to almost 30,000. So that is how, guys, if you have good money, you can use options to hedge your contracts. So in case you're a bullish person, let's say that, one second, let me just flip the positions. This is known as a bull spread. So let's assume that you're expecting the market is going to go up. But instead of just buying a call, what you do is you sell a call you buy ATM and you sell OTM. So that time what happens? Your maximum profit is also defined. Your maximum loss is also defined. And look at the margin premium. You need only 19,000 rupees. So that is how you use permutation combinations in options to take a particular trade. Okay. So right now you don't have to understand what a spread is, but just understand logically how exactly two different combinations of options work. So for everything, in case the market is going to go up, there's a strategy. So you can use this. If the market is coming down, you can use this strategy. So see, as and when the market is coming down, you'll make profit. As and when the market is going out, you'll make loss. No matter how much the market goes up, your maximum loss you can make is 5,000 rupees. That's all. So let us assume that you feel market is going to remain constant. So let's assume market is going to remain constant. So you know what you'll do? I'll teach all the strategies very slowly, but just give you an example of how options are so useful. So let's say market will stay only in this position. That is 19,400 rupees it will stay. So you know what you should do? You should go at the money call. You should sell. And you should sell at the money put option. So can you see here? As and when the market is stagnant, that is when you will make the maximum profit. You will make 9,300 rupees you will make if the market is remaining still. So what you can do is, in case your prediction says that tomorrow market is going to stay stagnant, that means Nifty is going to stay at the same level, you can always go and sell at the money call. So right now if Nifty is at 19,400, sell both call and put, because the maximum decay happens at the money call option. Why? Because it does not have any intrinsic value. So as and when the market remains same, the time value of money decreases, and whatever you have sold, the time value of money you have it with you. So if it decays, the person who has bought the contract from you will lose money and you will keep all his money. So that is how it works. Okay, did you all I know you didn't understand, but just see the recordings. This is all just permutation and combination of different options. Okay, so see the
Adit,
recordings.
can we all do this together at one class? Maybe
Yeah,
tomorrow,
yeah,
not
sure.
tomorrow,
We'll
maybe
do that next
next week,
week.
1 week.
Done. We'll do that next week. So all this call spread and all, I'll do it next week. But I just wanted to show you what is the maximum loss and what is the maximum profit you can make by getting into an option contract. Serena.
I understood.
Yes. So now, guys, we'll do one thing. Now that you understood how an option is, what is at the money, out the money, in the money call, all those things, now I will show you the entire process from starting to ending, how you can make money. Sounds good? Sounds good? Are you all here with me?
Yes, yes.
Okay, perfect. Okay. So now can somebody quickly tell me what is the starting process we do from the global markets? First we start with global markets, then Anuya, you tell Anuya. First we start with global markets, then we look at which markets.
Indian ma.
Correct. Correct. After that,
Use
sectors are news.
sectors.
Then you'll select one sector. Once you select the sector, what will you do next?
SWOT.
You'll do SWOT on the sector.
No,
News.
after choosing a particular sector and
Correct. First you choose a particular sector, then what do you do?
pick
News.
stock,
Correct. So you select a stock, then after that, what do you do?
peer comparison,
Correct. After peer comparison, what do you do?
select the best one. I mean, whichever is
Perfect. Perfectly clear. Correct. After that,
then SWOT,
okay.
then fundamentals,
Okay.
financials of the company,
Right. Got it. And then
then buy the stock.
wrong. Where did technical analysis go?
Oh, correct. Yeah, technical. Yeah,
Yeah.
correct.
So you do what?
We check the trend,
Correct.
if it's a uptrend or a downtrend.
Hmm.
Then what else is there? We use MACD and super trend and few indicators
Okay.
just to make sure if whether what trend is going on.
Hmm.
And according to the news, hold it.
Hmm.
That's it.
According
Hold
to
and
the indicators, you buy or sell, right? If the crossover happens, you buy. If
correct,
the
correct,
crossover does not
correct.
happen, you
Crossover.
hold.
Wait for the crossover. Yes.
Correct. You wait for the crossovers in all the MACD, RSI, stochastic RSI, all those things you need to see. Good. So now I will give you two ways. The first way, what Pawan told perfectly, what he told is the long term way of doing it. So now you all want to be day traders, right? So from now on, if you want to make big money, go to the stock. If you want to make small money every day, start analyzing the index. Start with pure technicals. So let us start off right away. So now what you have to do is go to your trading. Okay, I have to share the screen 1 minute. So go to your trading account first. Okay, so you go to your trading account and see which index you want to purchase. So I would always go for Nifty. So just click on Nifty over here and open the chart. Open chart in new tab. So Nifty is here. Click on trading view here. So now trading view will open up. So here I have already put the template. So now you can start with EMA. See, I've already put all the EMA cross over here. So when you do this on upstocks, right? This will already be saved. The template will be saved automatically for you all. So now I've changed it to 15 minutes. I've put candlestick, indicators, I've put everything. And then I will start the analysis of Nifty. So let us go to indicators. The first indicators I'll put is RSI. Then I will put MACD. Oops. And then I'll put stochastic RSI. Okay. So here we can reduce the size of the indicators. You can reduce it a little bit. Here you expand. See, here you expand and here you can reduce it a little bit. Okay, let's reduce this also. Let me change it to light theme. Okay, never mind. Okay. So now, where is RSI? RSI is at 38. That means Nifty is at a very downtrend. It's below 50, way below 50 it is there. Okay. And then let us see what happened to RSI. My MACD. Can you see here, guys? MACD crossed over. That means the red is crossing over blue. Can you see here? The red is crossing over the blue. That means it's a bearish sign. It's very bearish. And here, stochastic RSI already gave a sign. Can you see? Right here, it gave a crossover and see how Nifty has fallen. And here, the bearish crossover has already taken place. Can you see? The crossover has already taken place here. So now what you'll do, the entire trend, guys, the entire trend is in a downtrend right now. So what you'll do is you will close your eyes and buy put option. So to see which put option is the best, you go to your trading account. So you just shift tabs to the trading account. The tabs are right on the top, and you start looking at which is the best put option there is. So right now Nifty is at 19,000. If you check here, one second. So if you check here, Nifty right now is at 19,424 rupees. 19,424 rupees. So what I will do is, I will check how much money I have. So right now, let's say I have 5,000 rupees in my broker account. I have 5,000 rupees in my broker account, let's assume. So what I'll do is, I will go and add a contract. So right now Nifty is at 19,424. So I am assuming, okay, so my assumption says that Nifty will go down to 19,320 rupees. So I want to buy a 19,000. Okay, so Nifty 19,300 put option, and I will select options over here. So can you see there's a plethora of options here. I will select 17th August and I'll click on add. So as soon as I add the option comes over here. Okay, so right now I can click on the symbol information, and here it says that the price of this option is 29 rupees. And when I click at buy, can you see I just need 1,400 rupees. So in case you can't afford this also, no issues, go to a higher contract. So I will go even more lower. I'll go to Nifty 19,200 put option. 19,200 P. 19,200 P. Okay, right here. So I'll just add this. So this becomes even more cheaper. So can you see, if you want to buy this, it's only at 700 rupees. So you can review and buy the order. But what was the condition that I told you? You cannot keep this option. You cannot keep this option for more than 1 day. That means if you buy today, you have to sell it by tomorrow, or else the time value of money keeps decaying. So let's assume that suddenly, okay, suddenly after you buy this, suddenly Nifty goes down till 19,300 rupees. This option contract will also have value. How can you do that? You can analyze that by looking at something called as, there is something known as sensible. Okay, so when you go to positions here, there'll be a new tab called as sensible. When you click on that, the same thing like Opstra will open up. So all these things we should do only in a live trading session. I cannot be able to teach it to you like this. So Monday or Tuesday I will keep a live trading session and we'll buy one option contract. Everybody put 1000 rupees in your Demat account and we'll buy one option contract. Okay? Yes? If you still haven't gotten your Demat account, please let me know. I will open it for you. So Monday or Tuesday we are getting into a live trading session and please put 1000 rupees in your account and we will start trading with options. Okay? Is everybody fine with it? Yes, no, yes, no?
Yes, yes.
Okay. Pawan, Yellidya Pav, why are you so silent? Manchu? Okay, Manchu is there. Ajay, what about you, boss? Okay. You have to attend, Ajay. See, somehow Manchu, Pawan, Manchu also, I don't know, he's going for internship, but somehow make some time and attend. So let's see what happens. So anyway, this is how you can actually start trading. So once you're adjusted to normal options trading, no, we will go to spreads. I showed you, bull spread, call spread, and all those things. Then we'll go to spread. First, we'll start with buying one or two options contract. You need to just assume that this 1000 rupees is going for donation only for your learning. I'll tell you, 99% we will not make money, but this is for your experience. Because virtual trading, screw virtual trading. Nobody is taking it seriously. I want you all to put 1000 rupees in your bank account and I want you to trade money, trade with that and do technical analysis and trade and see how much profits you make. Okay, so anyway, I will be sharing this recording. And do you have any doubts with regards to options? Any doubts you have, you tell. We'll clarify it right away. Pawan,
No, no doubt, sir. I think we have to
Later,
do the practical questions.
meeting, one more thing.
okay, sorry, Madu. Maga Pawan, you come home tomorrow, or in case you can meet tomorrow, you come meet sometime in the evening tomorrow. I will tell you properly. Yeah, and one day I thought of keeping a offline session, but we'll see what happens. Okay, cool. Then, if you don't have any doubts, thank you for attending today's session. And almost all the topics are done. By next week, there won't be any. See, by next week, there won't be any classes. So it's just going to be us doing live tradings, and I'll be mentoring you properly. Whenever you want, you can call me and all those things. But anyway, you can consider this as your last and final class. And I'm really happy you guys made it till here. So from now on, it's going to be completely different. So I would actually want to thank each and every one of you for attending till here. This is not goodbye, but I know you're going to miss the weekend classes. I'm also going to miss the weekend classes, and it was actually very fun and good for me. So I hope you also had a lot of fun and a lot of learning, and you have taken away a lot of things from me. And honestly speaking, I have seen the level you all were in, and now the kind of level you've all reached. So thank you so much for listening to me. And yeah, so we'll start live trading sessions from next week. Yeah, good night, guys. Bye bye. Bye, guys.
Thanks, Advait. Good night.
Bye bye. Good night, man.
Good night, Ajay.
Good night, Muga. Good night. Good night.
Good night, bro.